Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook, and I'll be your host for about the next 25 minutes here on Options Guide TV. Big news today, and I think we're really waiting for a lot of things to shake out. The Supreme Court decided that the President of the United States did not have the ability to just tariff whichever country that he wanted to. There's billions and billions of dollars of tariffs that are in play here. The market's still trying to shake it out. Right now, we have the S&P 500 index not really doing much relative. And I do think that if the Supreme Court would have went the other way with the decision, the markets probably would have got pummeled today. But right now, we have the S&P 500 index up a half of 1%. And we were higher and now we're a little bit lower. The retail stocks across the board are up. Target, which has kind of had a rough one, is up a little bit. Walmart actually did really well after earnings. Walmart was an interesting, just in general, what happened. They announced earnings. The stock went down as the market started to open the next day after the earnings announcement. The market started to go back up, and then it had a positive day. And now we're seeing in Walmart that it's actually being hurt a little bit in this space, while the rest of the retailers are bouncing back, if you will. Walmart is down about 2% and on the day. We do have a position in on Walmart, a deep in the money call option, and that position is still up. And that's basically because of we got a positive reaction to the earnings report. Nvidia's earnings is this week, so that's a big deal for everything in the tech space. But a lot of focus is going to be on what's going on with the tariffs, and it's going to be messy. Let's just leave it that way. See where we go from here. But in other words, if we look at other stocks that are in play, we still have the JP Morgan position on. We're trying to close that position out, but that didn't really work inside our paper trading portfolio. And more importantly, I think I want to focus on Netflix, because I also think that this news, in a weird way, could be positive for Netflix. If it's not in the major news cycle and things can just happen on Monday, the conversation for Warner Brothers, the negotiations will all change on Monday. They'll have a vote at the middle of March on whether to go forward with the Netflix proposal. And I mentioned this is 100% the case. I have Netflix in my own account, longer term position, and the stock got beaten up. And instead of doubling up to catch up, like in other words, the stock is way down, let's buy an extra 100 shares for every 100 shares that we have in our account. I bought a deep in the money call option, and then I changed my mind, and we had a deep in the money call option inside our portfolio. And I do think to play with Netflix, just a little bit longer term hold. Who knows exactly, when this deal is going to, if the deal is just to get some uncertainty in the marketplace. If the deal doesn't go through, I think it's good for Netflix. And if the deal does go through, it's also good for Netflix. I just think they need to get the certainty. They need to know what the marketplace is pricing in the factor that they don't know how much Netflix might pay for Warner Brothers. They might or not pay at all. But the bottom line is the fundamentals of Netflix haven't really changed. It's all about, well, if they spend the money, then there's a little bit more questions about what they're going to do with the asset. We'll call it Warner Brothers. And I do like Netflix longer term if you're willing to ride out the volatility. So instead of dealing with a deep in the money call option, I'm just going to buy the stock. And let's run to the Tradier Pro portfolio, and let's do that at this point in time. I'm going to actually add that position. So my outlook has changed. We had an order in on Netflix on the last show, and that order didn't fill. So I'm going to come back and we're going to look at it. I got another order in today. I just hit mid price. I'm going to change this order. 1053 is the market. Now we got to pay up for things inside the paper trading portfolio, especially if you're dealing with deep in the money options. So I'm going to put this down to $10. I'm going to let that ride for the show. We're going to try to sell it. The bid is 940. The mid is 1050. We're going to kind of go right in the middle and send that and see if that happens. And we want to replace that. Yep. And ding. There we go. Order's been sent to the floor. So we're getting rid of the Netflix position. Now we're going to swap that out. We're going to buy 100 shares of Netflix. So, excuse me. Whoa, where did that come from? Okay, so with Netflix, I'm going to click right here. And we're going to look to just buy the underlying stock. And I lost the bid and ask right now. All right. I guess we'll go in market. Yeah, we'll just hit market. Let's make it a market order. All right, so we bought 100 shares of Netflix. That is now, there it is, shows up in our paper trading position. And we'll make sure to get rid of this position. And we're just going to hold that long. I'd like that as a long-term hold. I think you're getting it at a discount. Let's just do it. All right, next. If we look at the portfolio of stocks that we have in the account, we also put on a trade recently in CME, and that position is up about 4%. But I wanted to show that we actually executed that order. Market's at 290. Well, let's take a quick peek at CME right over here. And we're just going to keep the position on. A lot of things are happening in the space with exchanges and with probability markets. So today we're seeing the market up 1.79%. If we just go over and look at the chart on CME, we see that we had a little bit of a breakout on it. This was a strong move to the upside. The only thing that makes you a little nervous is that we're getting quite a ways away from the 200-day moving average, but this is a definite breakout of the underlying stock here at 292 to set an all-time high in CME. So things are looking really good. PE ratio going backwards, the 12-month trailing PE is at 27 here. So still fairly reasonable relative to the rest of the marketplace and to the competitors. The forward PE even looks a little better. I don't remember exactly what it was, but I don't have access to the forward PE here. So I like the fundamentals. I like the concept of CME adding probability markets to their marketplace, and the more volatility that's in the marketplace, which we've had a lot of volatility overall, is adding to their fees. You still remember that it's an exchange, and if people are trading futures in any marketplace, the more volatility, the better that the exchanges do. Now, the one stock that's befuddling as far as that is concerned is if you look at Coinbase. Coinbase has a tendency to just ride right along with whatever Bitcoin is doing. And Coinbase came down and actually hit an area of support right here at 140. It's now up at 170. But overall, Coinbase is an exchange, and it's a well-run exchange. It's an interesting stock to buy. They recently had earnings too, and their earnings were okay. But the stock still has everything to do with, let's go back more days. Let's go 1,500 days. It just seems to always trade right along with whatever Bitcoin's doing. And so see this area of support, and I think we highlighted it going into earnings, right at the 140 level. So I'm going to try to take advantage of some of the volatility of the stock coming down, but we touched 1, 2, 3 times. Now we'll see if we can break through the 20-day moving average here, try to get our ducks a little bit more aligned. The 200-day is still kind of staying flat, but obviously this is ugly. This is called the death cross when you have the 50-day crossing over the 200-day. And that precipitated in a strong move to the downside. But really, it's just trading right along with Bitcoin. Bitcoin, seems to have built a little bit of a foundation right here. So I'm gonna look at selling a short call spread in coin. Just I like the bounce, I like the chart, I like where it's at. So it's very similar to what we did in CME. And once again, the volatility that and the heavy trading on the downside still doesn't hurt their bottom line, their numbers. But you still have the risk that it does have a tendency to do as Bitcoin does. Okay, so let's put in coin. We're going to go out about 35 days. 35.41 right in there is where I'd like to be. If it's a little bit more volatile, I'm going to lean. So my outlook is on underlying stocks that have a little less volatility like CME. I'm going to go out a little bit further in time. I want to get a little bit more premium. I'm not quite as scared of the underlying stock. In coin, the fact that it's a little bit more volatile, I don't mind doing, instead of doing a 41 day, doing a 35 day. So if these are my two options, I'm going to lean to this. We also have high volatility, right? Implied volatility is 70%. So this is what we're trying to take advantage of. And by going out a little further, those options are very susceptible to changes in implied volatility. And so we got the chart with us. We got implied volatility high, and we're hoping that we can make money off of the fact that it moves. I want to sell something about where that support line was. So we're going to look at about 142 is where the bounce. I didn't know the bounce. We've made a pretty strong move off of those lows, haven't we? We were talking about it actually going into their earnings report. So we're going to look at like the 170 because we want to bring in premium. So we're looking at this as an alternative. Let's put it this way. I wouldn't mind in coin buying premium. I buying a long call spread more than likely because vols are really high. But as an alternative to that, I want to sell something that has time decay on its side and implied volatility on its side. So to me, that alternative is to sell something very close to where the underlying is trading. So we're going to do that, and we're going to put this on for 35 days. Our ultimate goal would be in 2 weeks' time, we would get out of the position. But we want to bring in some real cash. If we do this, it's going to protect us on the downside in that we're going to have a lot of premium. So that will bring back, we'll pare back our break even on the trade. But as opposed to just buying an at the money call, we're going to sell that at the money call. Or at the money put, I should say, and then buy another put for protection. And that makes a bull put spread. Put credit spread is another way to say it, but that's going to be our position. We're going to go out 35 days, and we're going to look to do this. Earnings are done, so there is a lot of catalysts, a lot of news that happens in the crypto space. There's a lot going on, but with Coin and Coinbase, the major news event is over, right? Because the earnings have already occurred. But look at the vol that we have. The 170 call trading at 70% vol. We're getting $14 for it. 173.43. So we're going to sell the 170 and look at, we might buy the 160, or we could go down to the 155. We're going to go fairly wide on this. That's the wrong, I hit the buy. 1 second. Sell and buy. Yeah, that's a real nice premium. We're getting almost half with the spread. If we can execute this at 4. So my goal usually, if I was looking at an at the money short put spread, is to get about a third of the premium. And we're not even selling the most at the money. We're a little bit out of the money. We're $3.77 out of the money by selling the 170 put. And we're still bringing in $4.70. So to me, we might even be able to adjust this down. My goal would be to get at least $3.30, get a third of the width of the strikes. So I might let's look at, this isn't bad. I don't mind it. Let's send it to the what if calculator, because that's good premium. 50-50. Like, in other words, you're selling this out of the money and you're looking to make $4.50. And the risk is $10. So the most you can lose is $5.50. So, I mean, that's interesting to me. That's a really solid risk reward on the downside. Skew is in your favor. Okay, let's clear this one out. And I'm just going to go down and target here's another thing that I'd like to do when I'm setting these up. Just target the 20 delta, somewhere right around 20. That's still a lot of premium. And this is going to be the one that we buy. And then let's look at, yeah, we're still looking pretty good, even if we do this range. So the 150 is a 22 delta, and the 160 is a 31 delta. Okay, so let's look at doing this. Let's hit this bid, and let's buy that one. 365. Yeah, so I don't mind shifting it down. Skew is relative, skew is, I'm going to give up, we're going to give up 90 cents almost. A little bit less, but we're that much more out of the money, and we're still getting the numbers. We're still getting $3.65 if we can fill at that midpoint. This is going to be very hard to do in this paper trading platform, but in the real world, got a little bit of open interest. We don't got a lot of open interest. Well, let's put it in here at our number that we were talking about, 330. That's the number that I would want. That's the bottom line. I wouldn't want to go less than 330. And I'm going to send this to the floor. So we're going to do this in the paper trading app, but I like this trade. I like the bounce. I like it for everything that I mentioned. So we're looking to sell the 160 put and buy the 150. I don't mind the other trade either, just so you know. 450 50-50 risk and getting something out of the money with a fairly high probability of success, that's another solid trade too. You got to believe that coin will go up, or Coinbase, but that is a solid gate. And it's a very interesting play just in crypto. If you think crypto's going to get its dead cat bounce, let alone, I should say Bitcoin's going to have a dead cat bounce on the downside. Bitcoin is the one that's getting beaten up the most out of a lot of the stable coins that are out there. All right, 330. Let's hit this. Boom. Talking too much. We'll just send that to the trading floor. So let's go back to our portfolio. Look at our orders. This is really annoying that this won't just fill me here. This is still open. I'm going to have to adjust it. I'm just going to have to hit the bid because I had it in there the whole time on our last show, and we still didn't hit it. So I'm just going to hit the bid. All right. Not much I can do about it. Paper trading app, just be cognizant that we're giving up a lot of bid-ask spread in this app. But it's a really nice platform. You have the paper trading platform here, and you have all the tools that are inside the platform on the real side of things. And sometimes I even get confused which app I'm in because they are so similar. So I love this feature of Tradier Pro, and I want to start highlighting it. We're even talking about doing a basic webinar with Tradier to highlight how you can use the paper trading app to try to build your skills along the way. So keep an eye out for that. And I think this is going to be it for the day. I see a comment. Let's go ahead and toss that up. And good morning, Kurt. Did you get out of the Coke trade, Kurt? Because I know you were in that. Coke should have did well today, I would assume, in the staples world with the news. I don't have Coke in my paper trading. Let's add it over here onto the watch list. Yeah, we're up a smidge today, 79.20. All right, not bad. Target really jumped a little bit today. Where's Target at? Now it's only up 14 cents. So I don't know. I guess people are coming back. Maybe the thought is that something else will take place in the tariff space to replace what we found today. But the markets are just kind of blah. The VIX is at 1880. VIX actually came off a little bit. Wow, that's just surprising to me. The markets are what the markets are. They got their own beast, but the VIX is off. SPX is flat, which it does make sense that we got the S&P up 0.5% and we got the VIX down. but that news event obviously was probably driving the VIX higher. But I do think the VIX should, volatility, I would think, needs to be around 20, 21%. There's just so much news, and there's just so much volatility in the marketplace. The actual volatility has been greater than what the VIX has been implying. That's straightforward. All right. Well, I think I'm gonna leave it there. I'll make sure the Coinbase trade fills. I'll adjust that to make sure it fills so that we have the position. And I'm still trying to just close out the DK trade that we put in. And we'll come back. We'll come back on Monday. We still have a slew of earnings. The biggest thing is going to be NVIDIA's earnings. NVIDIA is announcing after the close on Wednesday. So everything's going to hinge on that. We have TJ Maxx in the morning on Wednesday. Home Depot is an interesting trade. So they're before the open on Tuesday. And I think Home Depot's got some solid momentum to the upside. And this tariff news should help out too. Where's Home Depot at today? Yeah, Home Depot's up about 1%. Yeah, right there it is, 381. So we'll probably do a bullish trade on Home Depot on Monday's show. So there you go, a little foreshadowing. Thanks for stopping. My name's Brian Overby, author of the Options Playbook. Thanks for stopping into the Tradier Hub and watching Options Guy TV. We'll see you this Monday at 11 a.m. for the next edition of Options Guy TV. Thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.